Before we begin, this video is for educational purposes only and is not financial advice. Always do your own research before making any investment decisions. What if I told you that 1,000 euros sitting in most people's bank accounts doing absolutely nothing could be the foundation of a wealth-building machine that generates money for the rest of your life? Not through luck, not through risky bets, through a simple, proven strategy that anyone can follow. In this video, I'm going to show you exactly what to do with 1,000 euros to maximize its long-term impact, step by step. Let's get into it. Most people look at 1,000 euros and think, that's not enough to make a real difference. They're wrong. The power of 1,000 euros isn't in what it is today, it's in what it becomes over time through compound interest. Let's run the numbers. 1,000 euros invested in a global ETF returning 7% per year, the historical average, becomes around 1,967 euros in 10 years. In 20 years, it becomes 3,170 euros. In 30 years, it becomes 7,712 euros. In 40 years, nearly 15,000 euros from a single 1,000 euro investment. You didn't add a single cent after the initial investment. Time and compound interest did all the work. Now imagine you invest 1,000 euros today and then add just 100 euros every month on top. After 30 years at 7% annual returns, you'd have over 128,000 euros. After 40 years, over 264,000 euros. This is why 1,000 euros is not a small amount. It's a starting point. And starting points are everything when compound interest is involved. Before you invest a single euro of your 1,000, there's a smart way to think about splitting it. Here's the framework I'd recommend for a complete beginner with 1,000 euros. 500 euros goes into your emergency fund if you don't already have one. We covered this in our Saving Money video. 3 to 6 months of essential expenses in a safe, accessible account. If you already have an emergency fund, skip this step and invest the full 1,000. 500 euros, or the full 1,000 if your emergency fund is sorted, goes into a broad, global ETF as a lump sum investment right now. Why split it this way? Because investing money you might need in an emergency is one of the biggest beginner mistakes. If markets drop 30% the month after you invest, and you need emergency cash, you'd be forced to sell at a loss. The emergency fund protects your investment from ever being touched before it's had time to grow. Once both are in place, your emergency fund fully funded, and your initial ETF and investment made, then every spare euro from that point goes into your monthly ETF savings plan. That's when the wealth machine really starts running. With your 500 or 1,000 euros ready to invest, you need to choose where it goes. For a beginner with this amount, the answer is simple. 1 broad global ETF. The two best options for European investors that we've covered before are the iShares Core MSCI World UCITS ETF, ticker IWDA, and the Vanguard FTSE All World UCITS ETF, ticker VWWCE. IWDA tracks 1,500 companies across 23 developed countries. TER of 0.2%, over 60 billion euros in assets. The most popular choice for European beginners. VWCE tracks 3,700 companies across 49 countries, including emerging markets. TER of 0.22%. Broader global coverage. Either one is an excellent choice. Pick one, don't overthink it, and stick with it. One important decision: accumulating or distributing. For a beginner in the wealth-building phase, accumulating is almost always the better choice. Accumulating ETFs automatically reinvest any dividends back into the fund, maximizing compound growth. Distributing ETFs pay dividends out as cash, which sounds nice, but slows down compounding and creates a tax event each time. Stick with the accumulating version of whichever ETF you choose. Your future self will thank you. Once you've chosen your ETF, invest the lump sum immediately. Don't wait for the market to dip. Don't wait for things to feel more certain. Just invest. Studies consistently show that investing a lump sum immediately outperforms spreading it out over time in the majority of cases, because markets go up more often than they go down. Every day your money sits in cash is a day it's not compounding. Open Trade Republic or Scalable Capital. Search for your chosen ETF. Tap Buy. Enter your amount. Confirm. Done. The whole process takes under 5 minutes and you're now invested. Yes, the market might drop next week. Yes, it might feel uncomfortable watching your 1,000 euros become 900 euros temporarily. But remember, you're not investing for next week. You're investing for the next 20, 30, 40 years. Short-term drops are completely irrelevant to long-term outcomes. This is the step that turns a one-time investment into a genuine wealth-building machine. The lump sum gets the engine started. The monthly savings plan keeps it running and accelerating indefinitely. Go back to your Trade Republic or Scalable Capital app. Find the same ETF you just bought. Instead of buy, tap Savings Plan. Set your monthly amount. Even 50 euros. Even 25 euros. Whatever you can genuinely commit to without it feeling painful. The most important thing is that you can sustain it consistently for years. Set the execution date for the day after your salary arrives. Confirm. Now, here's the powerful part. Every month that Savings Plan runs, it buys more shares of your ETF, regardless of whether the market is up or down. When the market is down, your fixed amount buys more shares at a lower price. When the market is up, your shares are worth more. Over time, this averaging effect, called euro cost averaging, smooths out market volatility and consistently delivers strong, long-term returns. You set it once. It runs automatically. Every month, your wealth machine adds more fuel. Every year, the compounding accelerates. You don't have to do anything except not touch it. So here's how you turn 1,000 euros into a wealth-building machine. Split it intelligently between your emergency fund and your first ETF investment. Choose one broad global ETF, IWDA or VWCE, accumulating version. Invest the lump sum immediately without waiting. Then set up a monthly savings plan and let compound interest do the rest for decades. That's it. No complexity, no stock picking, no market timing, just a simple system that works and has worked for millions of people who started with exactly what you have right now. Subscribe to SimpleWealth for more simple investing content every single week. Drop your questions in the comments and we'll see you in the next one.